Level up your life the credit score game. Think of your credit score like a video game. You start at level 1, right? Maybe you snag a few coins, buy some basic gear, but the real magic happens when you level up. You unlock incredible rewards, lower interest rates, better loan terms, even a nicer apartment. That, my friend, is the power of a great credit score. It's your financial passport, a secret code that whispers to lenders about your money habits. And trust me, they're all ears. A good score can open doors to amazing opportunities, while a not-so-good one can leave you stuck at the starting line. But don't sweat it. Just like mastering any game, understanding the rules is key. Once you know how to play the credit score game, you'll be racking up those points and unlocking those sweet, sweet rewards in no time. So, are you ready to level up your financial life? Let's do this. Okay, let's break it down. A credit score is a 3-digit number, typically ranging from 300 to 850. Think of it as a financial GPA based on your credit history. It tells lenders how risky it is to lend you money. The higher your score, the better. It shows you're responsible with borrowing and repaying. A high score makes you a financial rock star in the eyes of lenders. They'll be falling over themselves to give you the best deals. On the flip side, a low score can make things a bit tougher. You might face higher interest rates, get rejected for loans, or have to put down larger deposits. It's like trying to buy a luxury car with a learner's permit. But here's the good news. Your credit score isn't set in stone. You can improve it over time with some smart moves and a little bit of discipline. Here's the thing. A good credit score is your ticket to a smoother, less stressful financial life. It's like having a VIP pass to the best financial products and services. Think about it. Applying for a mortgage on your dream home? A good credit score can snag you a lower interest rate, saving you thousands of dollars over the life of the loan. Buying a new car? You'll qualify for better loan terms, meaning lower monthly payments. Even landlords and utility companies often check credit scores. A good score can mean the difference between getting that amazing apartment or being stuck with a security deposit that breaks the bank. And it's not just about loans and apartments. A healthy credit score can even impact your insurance rates. That's right, some insurance companies use credit-based insurance scores to determine premiums. So yeah, that credit score is kind of a big deal. But remember, you're in control. By understanding how it works and taking steps to improve it, you're setting yourself up for a brighter financial future. Alright, let's get down to business and demystify this credit score thing. There are 5 main factors that make up your score, each with its own level of importance. Think of them as the 5 pillars of your financial temple. 1. Payment history, 35%. This is the big kahuna. Lenders want to see that you pay your bills on time, consistently. It's like showing up to work on time every day. It builds trust. 2. Amounts owed, 30%. This refers to how much debt you're carrying compared to your available credit. It's like balancing a plate of cookies on your head. Too many, and you're in trouble. 3. Length of credit history, 15%. Think of this as your credit experience. The longer you've been responsibly managing credit, the better. Like a fine wine, credit history gets better with age. 4. Credit mix, 10%. Having a mix of different types of credit cards, loans, etc., shows lenders you can handle various financial products. It's like having a well-rounded financial diet instead of just eating pizza every day. 5. New credit, 10%. Opening too many new accounts in a short period can ding your score. Lenders get a little nervous when they see a lot of recent activity, like you're suddenly desperate for cash. Understanding these 5 pillars is the first step to building a rock-solid credit score. Now let's dive into each factor and see how you can boost your score to the next level. Remember that payment history pillar? It's the VIP of the credit score world, accounting for a whopping 35% of your score. This is where consistency and responsibility shine. Think of it like training for a marathon. You put in all the hard work, logging miles and building endurance. But then, you decide to take a nap right before the finish line. Don't let late payments be your marathon nap. Make it a habit to pay your bills on time every time. Set up automatic payments or calendar reminders so you never miss a due date. Even if you can only make the minimum payment, do it. A history of on-time payments shows lenders you're reliable and trustworthy. And if you do slip up and miss a payment, don't panic. Contact your creditor ASAP and explain the situation. They might be willing to waive late fees or work out a payment plan. Remember, your payment history is a marathon, not a sprint. Stay focused, be consistent, and you'll conquer that credit score finish line. Let's talk about credit utilization, aka amounts owed. This fancy term simply means how much of your available credit you're actually using. Imagine your credit limit is a delicious cake. You could devour the whole thing in one go, but that wouldn't be very responsible, would it? Plus, you'd probably get a stomachache. The same goes for credit cards. Maxing out your cards tells lenders you might be living beyond your means and increases your credit utilization ratio. Aim to keep your credit utilization below 30%. So, if you have a $10,000 credit limit, try to keep your balance below $3,000. Think of it like this. You wouldn't want your crush to see you covered in cake crumbs, right? Keep your credit card use in check, and your score will thank you for it. Remember, a little self-control goes a long way. Manage your credit wisely, and watch your score rise like a perfectly baked cake. Now let's talk about credit history, the age of your credit accounts. This is where patience really pays off. Think of it like a vintage record collection. The older and more extensive your collection, the more valuable it becomes. Similarly, a long and positive credit history is like gold to lenders. It shows you've been playing the credit game for a while and have a track record of responsible borrowing and repayment. So, if you're just starting out, don't worry, time is on your side. One of the best things you can do is keep your oldest credit accounts open, even if you don't use them much. Closing old accounts can actually shorten your credit history and potentially lower your score. Just like that vintage record collection, your credit history tells a story of your financial journey. The longer and more positive that story is, the more impressed lenders will be. Remember how we talked about having a well-rounded financial diet? That's where Credit Mix comes in. Having a variety of credit accounts, credit cards, installment loans like car or student loans, mortgages, shows lenders you can handle different types of debt responsibly. Think of it like being a credit connoisseur. You wouldn't just drink one type of wine, would you? You'd want to sample a variety of flavors and grapes to find what you really enjoy. The same goes for credit. Having a mix of credit accounts demonstrates to lenders that you're comfortable managing different types of debt, from revolving credit to installment loans. But hold your horses. Don't go out and open a bunch of new accounts just to diversify your credit mix. Remember, too many hard inquiries can hurt your score. Instead, focus on building a healthy mix gradually over time. Just like a well-curated cheese board, a diverse credit mix can make your financial portfolio more appealing to lenders. So, be a credit connoisseur, experiment responsibly, and watch your score savor the flavor. Remember that new credit pillar? This one can be a bit tricky. While having a healthy mix of credit is good, opening too many new accounts in a short period can make lenders nervous. Think of it like this. You wouldn't want to scare off a potential new friend by coming on too strong, right? The same goes for credit. Lenders like to see a slow and steady approach, not a frantic dash for new credit. Every time you apply for new credit, whether it's a credit card, a loan, or even a new utility account, it creates a hard inquiry on your credit report. Too many hard inquiries in a short period can make it look like you're desperate for credit, which can ding your score. So, how many hard inquiries are too many? There's no magic number, but as a general rule of thumb, try to limit your applications to 1 or 2 per year. And when you do apply for new credit, be strategic. Don't just apply for every offer that lands in your mailbox. Choose products that align with your financial goals and needs. Remember, when it comes to new credit, slow and steady wins the race. So you've learned the secrets of the credit score game. You understand the 5 pillars, and you're ready to level up your financial life. But what if your credit score isn't where you want it to be? Don't worry. There are plenty of tools and strategies to help you repair and rebuild your credit. Think of it like giving your credit a little TLC. Just like you'd go to the doctor for a checkup, it's important to regularly review your credit report for any errors or inaccuracies. You can get a free copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year at annualcreditreport.com. Once you have your report, comb through it carefully. Look for any errors, such as incorrect account information, late payments that were actually paid on time, or even accounts that don't belong to you. If you find any errors, dispute them with the credit bureau immediately. They're legally obligated to investigate and correct any inaccuracies. Remember, credit repair takes time and effort, but it's an investment worth making. By taking charge of your credit, you're taking control of your financial future. Congratulations, my friend. You've reached the final level of the credit score game. You now understand the ins and outs of credit scores, the factors that influence them, and how to improve yours. Remember, your credit score is a reflection of your financial habits. By making smart choices, paying your bills on time, managing your debt wisely, and being patient, you can unlock a world of financial opportunities. A good credit score is about more than just getting approved for loans or credit cards. It's about having financial freedom, peace of mind, and the ability to achieve your dreams. So go forth and conquer. Use this knowledge to build a bright and secure financial future for yourself. You've got the power,